Okay, everybody, it's me, Gregory Mannarino. It is Monday, February 6th, 2023. We have a problem here, and I know you're aware of this if you do subscribe to my newsletter. I blasted this out last night. Trouble. There appears to be a sell-off here occurring in the global debt market. And this is not a good sign. You already understand that there's a major liquidity problem going on here. The debt market itself is a time bomb and it's ticking louder and faster. Okay, so we got a spike here in the US 10-year yield. Let's just cover this real quick. Right now, 10-year yield is spiking. Not just that, you got a rising here of the relative dollar strength. This is a clear fear trade. Something is going on. I'm not sure what it is yet. I guess we're going to find out sooner or later here. Stock futures are under pressure right now on the back of this. I can't stress to all of you enough what a major problem the world has with regard to this debt hyper bubble. What do we know is going on? What do we know for a fact is going on? Central banks are buying more debt. They have to do it. To keep rates where they are, central banks must get into the market and make it happen. So when you see this phenomenon of global bond yields rising, US 10-year yield rising, some big entity out here is dumping the debt. Okay, I think we may have an idea who's doing this right now. It's been going on for a while. I'm talking about China here. Well, someone's going to make up this difference here. And in my view, one of two things is going to happen. Either the Federal Reserve is going to increase purchases. You're not allowed to know this, okay, but that's how it works. They have to get into the market and make it happen. Or they allow this thing to implode. I don't think they're done yet. Maybe I'm wrong. I've been telling you this since the end of last year. Central banks are going to buy more. They're going to keep rates suppressed from here till kingdom come, whenever that is. I've been telling you that too for forever here. But something's up. We need to raise our awareness. I need to at least, try to figure out what's going on here. Is this just a normal, natural phenomenon which we knew all was going to happen at one point, that bond yields were going to start selling off, uncontrolled spike here in global bond yields, US 10-year yield more specifically here, global stock markets are going to take a big hit, and then the cash is just going to move into commodities? That's the scenario I have outlined for all of you since time immemorial. Unless action is taken immediately to do something about this by central banks, because they're the ones that control the debt market, they control the markets, the economy, the financial system, well, then this is just over. So we're going to need to know what happens. Now, the MMRI this morning on the back of bond yields rising, relative strength of the dollar higher, the MMRI, I just looked at it, 231.8. Now, we're not near the first red line in the sand, which is 250, but if this keeps up, we're going to hit 250, but quickly, and then we could probably surpass 300. If that does happen, if the MMRI starts to spike, keep your eyes on the MMRI, okay? Free to you, free to everybody, link in the description of this video. If we start seeing that MMRI spike, it's time to run for the freaking hills, people. Run for the hills here. And that's a fact. Now, a couple of other things I want to bring to your attention just real quick. So Goldman Sachs just put out a very interesting report on energy, more specifically crude oil. Now, we already know the game. They're going to throw shortages of everything at us moving forward here. I believe we're going to see food shortages, much higher inflation, shortages of water. Now, Goldman Sachs is warning of a shortage of crude oil. Now, crude oil, what is crude oil? It's the lifeblood of the military-industrial complex. It's the lifeblood of everything. If there happens to be a shortage here, or they're building up or letting us know that there's going to be a shortage of crude oil, you can only imagine what that means to the price of everything. See my finger pointing up? Everything is shipped using crude oil. Look, this whole nonsensical farce that has been thrown at you and I with central banks here trying to control inflation, and they're raising rates and they're serious about it, has been nothing but a game that they're playing on the people of the world. They have no intention at all of stopping inflation. Sure, they've slowed the pace of it, but inflation continues to rise. It's not going to stop, and it won't stop, especially if Goldman Sachs is right with regard to a crude oil shortage moving forward. Now, of course, this will be engineered. We all understand that. And if this war expands, or we start to see other wars break out all over the world, which I think we're going to. I think we're on the same page with that. We are clearly marching towards a new World War III. I think it's already started here. This is how the system generally works. As everything comes down and it's being brought down to its knees by design, by central banks who are determined to kill the economy. They're not determined to stop inflation, because all they need to do is contract the money supply by forcing financial institutions to raise their capital reserve requirements. Not happening. You don't even hear a word, not a syllable, not a sound about this contracting the money supply on any of the mainstream media outlets. You don't hear it. Okay, that's because you're not allowed to know that's even a possibility. Understand? So they're trying to sell you the lie. Oh, central banks are raising rates. It's going to make a difference. Hasn't done anything. Yes, it has slowed the pace, but inflation continues to rise. Something else going on here. God, my nose is so freaking itchy every morning. Allergies, brutal. Anyway, banks. I've explained to you that banks are in trouble here. That means you're in trouble. All right. Now, the banks are not in trouble. You're in trouble. We just found out that the deposit rate, in other words, people are suffering on a monumental level. The deposit rate for consumers who are savers continues to free fall here. Okay. So we have, again, why are the banks in trouble? No deposits, no loans, no deals. We already know what's going on here. We talked about this maybe 2 months ago. Central banks are prepared to provide yet another lifeline to the big banks to keep them liquid. Understand, the entire financial system is illiquid. The entire financial system is insolvent. It's debt-based. You all know that. And if they're letting us know that there's a problem here, okay, with regard to the banks seeking a new lifeline to central banks to get reliquefied, that means you're in a lot of trouble here. I don't think people should keep any money that they don't need to in any of these financial institutions here, because there's a very strong possibility there's going to be a bank run at one point here. You won't have access to any of your cash. You need some cash around. You understand? I've been telling you this forever here. There's going to be a moment here, and maybe, look, we're seeing something that really should open your eyes. When you witness global bond yields rising like this, that is a danger zone, a danger sign. You understand? That there's a problem here in the financial system, being that the debt market is the backbone of it. Okay, that without central bank intervention has the potential to unwind very rapidly, and it'll destroy the economy. It'll destroy the consumers. That's what they're trying to do here anyway. So this is why you should be raising your awareness here. We're in an environment where central banks are deliberately going out of their way to kill the economy by crushing the consumer. What better way to do that than, again, inflation continues to rise here, shortages of this, that, or the other thing, shutting them out of their own accounts. You see what I'm talking? This is going to happen. I think you all know that. We're going to get a liquidity freeze up. That means the whole system is going to lock up. And this is all based upon action in the debt market. This is why I watch the debt market every day of my life. And then you get to see how this is reflected in the stock market. Again, just put that together real quick. Okay, so the driver of the market, the main driver, is flashing a dangerous signal right now. Global bonds selling off. Okay. That means, and rates are rising here. That's putting pressure on the U.S. stock market right now. You're seeing stock futures down. You got the relative strength of the dollar higher. Fear trade. You understand? And then we got, possibility of shortages in crude oil, banks here seeking new lifelines. The banking system is completely toxic. And just as the mortgage crisis here, the real estate bubble, well, that's bursting too. There's so many little facets to this, and that's what I think, to me, which makes it so exciting, honestly. But we know what we're looking at, you and me. Are we going to change a damn thing? No. We're going to continue to do what we've been doing here. With regard to being long this market, I'm still long this market. You all know that. If we see these global bond yields continue to rise, as bonds are selling off here, that's a sign to get out. You understand? I've been telling you this for the longest time. I will keep all of you on top of this. Continue to bet against the debt. Become your own central bank, because central banks are not going to stop what they're doing here. And I believe, look, I'm gonna go out on a limb here. I think, because I don't believe central banks are done yet, they're going to do something about this sell-off here in the bond market and stop rates from rising, which means they're going to buy more, which means they need to inflate more. You understand? They have to inflate. They have to buy more debt. So that's where we stand. So right now, I'm just looking at this. Implied open for the market is lower here. Not by much, but keep your eyes, you know what to look at, okay? Follow the MMRI. Again, link in the description of this video. We're at 231. If we see this go above 250, and this could happen very, very rapidly, or even if we hit 250, forget about it. Things are going to get ugly, and they're going to get ugly real, real fast. And if Goldman's right about a shortage here with regard to energy and crude, you can only imagine what's going to happen to the price of everything. So be prepared for that too. And be prepared for more war, okay? Absolutely, that's the goal. Bring us all to war. As you know, no endeavor on this planet generates more cash for the military-industrial complex than war, the expansion of war, and the propagation of war. People, this guy here loves you a lot. I mean that from the heart. Let's band together. Let's keep our eyes open. Get involved here. Comment, very important. Share the video. Get it out there. I will see all of you. Maybe we'll have a little more information. I'll have more to share with you. 10 a.m. Pacific Standard Time, 1 p.m. Eastern Standard Time. I'm going to do my live stream. So be ready for that. I'm going to do a little digging here to see what I can find with regard to this issue with the debt market right now, and we're going to keep our eyes on this. All right, I will see all of you later. That's all.